Oh, it's down at reconnecting.
There
Sweet.
we go. Okay.
All right, we're live. So, welcome back to part 4 of our business and taxes series. So, this will be the last part of it. So, thanks for hanging in there with us. And I'm Ann Lobos. So, I'm the owner of a company called North Star Consulting and Tax. So, I'm a business owner just like you. I've had my business for about 2 years, but I've been in this industry for about 20. So, got a little bit of tax knowledge up here that I want to be able to share with you. So,
Yep, and I'm Sam Jones. I'm a financial planner at Vitality Capital Management. And today, especially, we're going to talk about a cash management system so that you don't have to pay extra taxes at the end of the year and have that unexpected tax bill. Before we hop into specifically what that is going to look like, we just want to throw out the disclaimer that this is for educational purposes only. It's not meant to be tax or legal advice or investment advice, and you should seek a professional if you want that advice.
sweet.
Okay, so a lot of times we work with small business owners, right? And whether you're a new business owner and you haven't ever dealt with paying taxes as a business owner, or you have had a great year and made a lot more money than you did last year, a lot of times what will happen is you'll have an unexpected tax bill. And so that's what we're going to talk about today, is how to avoid that unexpected tax bill.
Yeah. So, I mean, if you make money in your business, that's the goal, right? That's everybody's goal, is to make money. And so I know that we like to minimize our taxes, but if we legitimately want to make money, we are going to have to pay taxes at some point.
Yep. And I would just add too that so this is part 4 of our series, and if you have not tuned into part 1, 2, or 3, this is awesome. If you've started a business, if you're thinking about starting a business, definitely tune in.
Yeah, so we'll throw these on probably on YouTube after we get them all done, and then we'll try to put them in the comments. So today we're going to talk about a cash management system that I use in my business and that I love. So first off, let's just talk for a minute about what cash management is and what it is not. So a lot of people think that cash management and accounting are the same thing, and they are not the same things. So accounting is really looking at your data from a historical perspective. You're looking at your sales last year, last month, maybe even last week. But cash management, on the other hand, is dealing with the money in your business kind of in the here and now, like today. And if you have to choose between a cash management system and an accounting system, I would recommend the cash management system, and here is why. So think about this statistic. So 70% of businesses fail by the time they get to 10 years, and some people argue that's even higher. It's as high as 80% and maybe even higher than that. So that you've got businesses that are failing, and the number one reason why they're failing is cash flow. Now, cash flow, a part of that is cash management, because cash management is really managing money coming in and the money going out. So if you can figure out how to get your cash flow to work, then you are going to have a much, much higher chance of succeeding than all those other businesses out there. So this system is called Profit First, and it's based on a book. So I didn't write it, I didn't make it up. It's based on a book. And I came across this book right when I had started my business. I remember sitting there thinking, okay, so I get that I'm an accountant, which everybody assumes that because I'm an accountant, I know how to start and run a business, right? Well, let me let you in on a little secret. That is not always the case, right? So I was like, okay, so if I want to make this much money in my business, how do I know what my sales need to be? Because what you want to make from your business is the number one goal. A lot of times businesses are like, oh, I want to have $1 million in sales. That means nothing, because I have seen so many businesses that make $1 million, and do you know how much money their owners take home? A big fat zero. So the starting goal really needs to be, what do you want to take home from your business? And the nice thing about this system is you can start with that, what you want to take home, and you can back into what your sales and your expenses need to be.
Yeah, I think it's cool because it's like a paradigm shift. A lot of people focus so much on that top number of sales, but instead we're saying, okay, let's look at the bottom number. What's the take home, and how do we get there? And let's reverse engineer that process so that you can have the lifestyle you want as a business owner. And I think that's exactly what the system does, is it helps you to have that profit, have that lifestyle as a business owner that you want, and the reason why you started your business.
Yeah, because we all started our business for profit, right? I mean, we didn't start it because it's fun, because trust me, it's not fun all the time.
So as part of this, we're going to talk in a sec about setting up different bank accounts. And I know we've talked about it previously, earlier in this series, but I want to talk about a concept called Parkinson's Law. And this is a really powerful concept. And the concept is we as humans tend to consume what is in front of us. And that's true in all aspects of life, whether it be time, food, money. Specifically, think about a plate of food. So if you're served a plate of food and it's bigger, it's got more food on it, you'll tend to eat more. And that's just a natural thing to do as a human psychology. We're given more food, we naturally eat more. But if this plate is smaller, we'll naturally eat less. And the same thing goes with the money. As we have more money in our bank account, we'll have a false sense of security and not realize maybe, the taxes that you were going to owe or the expenses that you have. And then you'll overspend and you won't be able to have money. And that's the whole point of this series, is so that you can avoid that unexpected tax bill.
Yeah. So what we're going to do is I found this, my daughter, she completely destroyed it anyway. I'm like, hey, I may as well repurpose this toy that she thought would be fun to draw on with permanent marker. I can't find a pen to save my life, but my daughter can find this permanent marker that's hidden, whatever. Anyway, so here's this. So this is our cake in our business. This is our sales in our business, right? So what we need to do is we need to decide how we're going to divide up that sales, so that one, we make sure we get paid first, and two, we make sure that we have our tax money set aside. So this is my sales cake in my business. And so what I've done is that I have a piece of the cake that goes to my profits. I have a piece, and I know that some of you are going to comment that the letters are backwards, so it happens to be because of the camera, the way it's flipped, but just deal with it, okay? It says profit.
You get the point.
And then part of it goes to owner's comp. And then in my business, I have a piece that goes to charity. You might not have that in yours. And then I have a piece that goes to taxes. And guess what? Whatever's left, that's what I can spend on expenses. I can't spend more than that on expenses. Otherwise, I know that I'm not going to get the profit and owner's comp that I want. And so this system is, the good news about it is that you aren't going to have to change your behavior very much, because chances are probably to figure out how your business is doing, you're logging into your bank account on your phone and you're saying, is there money in there? Is there not money in there? So we're going to keep doing that. We're just going to make that behavior a little bit better, where we're going to take the money and put it in different bank accounts. So think like a modern day version of grandma sitting at the kitchen counter with her envelopes of, here's my money for my groceries, here's my money for my mortgage. You're going to do the same thing, but you're not going to have envelopes full of cash, because that would be crazy. You're going to have bank accounts full of cash. So each of these pieces in your business has a different bank account. So tell us, Sam, behaviorally, what does that do for you?
I just think it's so powerful, because we tend as humans to look at what's in our bank account. We do that mental accounting and say, I have X amount of money, I can spend X amount of money, right? And sometimes you mentally account for your taxes, but normally we're off, and hopefully we're over, but oftentimes we're under, and that's what leads to an unexpected tax bill. And so I think that it's so powerful to set up different bank accounts, specifically for taxes, especially when it comes to tax planning. And that way you won't have an unexpected tax bill at the end of the year. And in the book, it even recommends setting it up at a separate bank account so that you're not tempted to use that money. And I know that can be annoying in our digital age, but that's what he recommends. And you know yourself, you know if you can stay accountable to yourself, but I think that it's just incredibly powerful to set up these different accounts and do this cash management system so that you are reaching your goals as a business owner.
Yeah, and this, like Sam just said, this is all about you reaching your profit goals. That's why you started your business. You didn't do it because it's fun, because sometimes it's really not fun, right? So you are trying to reach those profit goals, and you're trying not to have to pay a bunch of taxes that you aren't prepared to pay. So the cool thing about the way this system works is that traditionally the way tax payments work is you base them off of last year's income. Well, I don't know about you, but my goal as a business owner is to knock that income out of the park this year, right? So I want my income this year to be higher than last year. So if I'm basing my tax payments on last year's taxes and I had a really good year, I'm not going to have enough saved up to be able to pay that tax bill. So this makes it so that as you're going through the year, you're putting money aside based on this year, based on what's happening this year in your business.
Yeah, and I think that can be different for a lot of small business owners because when you work for a company, they'll pull out automatically what you owe to the government out of your paycheck. So you don't have to worry about proactively saving for taxes. But as a business owner, that doesn't happen. So that's exactly what Ann talked about, these quarterly estimated payments. And so it can be super powerful whether you have a really good year as a business owner to make sure you're setting aside enough for taxes. Or if you're a brand new business owner and maybe you're not used to setting aside this money, this is done once a quarter. And I think as humans, we're so used to living our financial lives on a monthly basis. And so just having the account set up where you're automatically saving a percent of your money for taxes is powerful so that you don't have that unexpected tax bill.
Well, and Sam just made a good point because you're probably sitting there thinking, okay, so I get it. I'm supposed to divide my money up into pieces, but how the heck do I know how to do that? And it is based on percentages. So don't freak out, because I know some of you are going to freak out because that sounds like math, but it's not, the math is not too bad. And so you're really just going to decide, okay, of my sales, what percentage do I want to go to owner's comp? And I know that we all would love it to be 100%, but that is not feasible because you have expenses. So you're going to decide what should go to owner's comp, what should go to profit, how much should I put aside for taxes, and in my case, charity, and then whatever's left, that's what I have available for expenses. And if I overspend that, then that means I am dipping into my profit money. And trust me, when you're faced with the choice of paying an expense or taking it as profit, your decision-making skills all of a sudden come to this higher level because you know there's a trade-off, right? And this system helps you know that there's that trade-off. It helps you see that trade-off a lot more. So
totally. And like Ann said, we work with a lot of small business owners, and so it can be really helpful to get a professional's opinion, and that's exactly what we do. We have mentioned earlier in the series that we have a free tax analysis that we'll do for small business owners. And as part of that, we'll help you determine how much you should be setting aside for expenses and taxes and all your different things so that you can be able to meet your goals throughout your life.
Yeah. So this is super fun. And I think we mentioned that I have another series on this. So I think it's a 5-part series. So I'll throw that in the comments and you can go watch that if you want to learn more about this. But it's a great system. Like I said, I'm not just teaching you a system that I don't use. Like
Me and Ann both use it.
Yeah, we use this in our businesses, and it really, I mean, I'm an accountant, but the truth is like I don't like to think about my, cash management that much. So this kind of lets me put it on autopilot and just know that, the money comes in, I'm going to be able to put it into the different plates, and then I'm going to be done with that, and I can move on to all the other things in my business that I got to think about.
Yeah, it takes that financial burden and makes it a lot easier to handle. Anyways, we hope you've enjoyed our 4-part video series on business and taxes. If you're a small business owner, go watch these videos, get familiar because there's a lot of strategies out there to help you save in taxes and get more into your pocket and not tip the IRS.
Yeah. And if you guys have a topic you want to learn about, throw it in the comments because maybe we'll turn it into a series. All right. Thanks, everybody.